And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. There is intense interest in trying to access the shares of tech companies that are still private, like SpaceX and OpenAI. A closed-end fund, Destiny Tech 100, recently began trading on the New York Stock Exchange and is trading at a very large premium to its net asset value. But are there other ways to access private tech equity? Let's talk with Brett Winton. He's the chief futurist at ARK Investment. Also joining us is Howie Nigg, head of analytics and investment solutions from Forge Global, and Nicholas Colas from DataTrack joining me here at the New York Stock Exchange. Brett, I'll start with you. You and Kathy Wood launched the ARK Venture Fund in 2022. This is an interval fund. It also invests in private tech companies like SpaceX, OpenAI, and Epic Games. And it also owns public companies like Coinbase and Robinhood. Now, you just published a paper that caught my eye claiming that this interval fund is a better way to invest in private companies. Can you explain why you think it's a better way?
Yeah, actually, interval funds were designed specifically to allow everyday investors to invest in less liquid assets, and venture fits right into that idea. So with an interval fund, you don't have to be an accredited investor. You don't have to be, very, very wealthy to invest in venture exposures like OpenAI, and you get to invest at the net asset value. So you can buy daily at the value of the underlying positions in the portfolio, and then you can sell quarterly. And so you have a quarterly window in which you can kind of sell your position.
And I want to, this is a good educational moment to inform viewers what an interval fund is. So with an interval fund, you can buy at any time at the net asset value. That's the key. So there's no premium or discount. And you can sell to the company at set times on a quarterly basis. Am I right about that?
Exactly. And so that's why it's an appropriate vehicle for illiquid assets, because it allows for kind of the manager to prepare for the redemptions that come and make sure there's a pool of liquid assets that they can sell to meet those redemptions, and those happen quarterly.
So, and you own private and public companies. Why does the fund own both private and public companies? Like you own Coinbase, for example.
Yeah, the majority of the fund is in private companies, so roughly 80%. And then the public equities in the fund is to facilitate that quarterly redemption process. Frankly, it's an amazing time to invest in innovation, and we think both venture exposures and public innovation companies are incredibly well valued today to take a long-term investment over what's a unique decade in technological economic history.
Okay, Howie, let me turn to you. Private funds for qualified investors are also available. Forge Global recently launched the Forge Acuity Private Market Index. This is a market capitalization weighted index that tracks the performance of 60 late-stage venture-backed private companies, for example, like SpaceX and Epic Games. And I know you told me this is already being used in a private fund. Tell us about this private fund. Who is qualified to invest in it?
Right. So first of all, as a data provider and also as an index provider, liquidity provider in the space, we just see all these different types of fund structure coming to the space, which is very exciting. And I think very similar to the interval fund structure, the private fund is has a very similar redemption and contribution window. So you do transact at net asset value on a quarterly redemption basis. And I think for this fund, it is targeting institutional investors. So it's set up to take contribution from qualified purchasers, which are $5 million of net worth, and you just have to qualify to invest in the fund.
And so qualified investors here are net worth of at least $5 million. And what's the ticket size? I mean, it's totally institutional, right?
The ticket size is $100,000 at this point. Down the road, it might get revised up. The idea about the private fund with qualified QP, qualified purchasers, is to target the institutional segment. I think for any kind of asset class to mature, you're going to have retail players and institutional players at the same time. For this one, it's just the first step that we actually see index investing, and we're targeting, the fund manager is targeting the institutional segment.
Right. I mean, the obvious problem here with qualified investors is they cut out essentially the retail investors, right? I mean, I assume, Howie, that was obviously a conscious decision on your part, right?
Yeah, it's definitely a conscious decision on the asset manager's path. But if you sort of think about the next product and the next product and more products coming to the space, the idea here is that now it's possible for you to invest like an index discipline, just similar to the public market, right? So this index is now launched for the first ever pure play institutional index fund. That's not to say down the road we won't see products that actually cater to the retail segment, but it's still index tracking.